Hello and welcome back to Smart Credit Bytes. I'm your host Sangeeta Sharma. Today we are going to talk about something that is the oxygen of every business, the heartbeat of every banker's evaluation, and the deciding factor in most MSME loans. Yes, I'm talking about working capital. Many entrepreneurs don't realize this, but more than term loan, more than collateral, more than your credit score, it's your working capital discipline that decides whether your banker trusts you. So, in this episode, I'll share what working capital really means in practice and not just in theory. How bankers calculate your drawing power every month. Why stock statement and receivable are banks microscoping into your business. The common mistakes MSMEs make, often unknowingly. And finally, a practical checklist to keep you loan eligible, strong, and your banker confident. And let me say you this upfront. If you have ever wondered why your loan limit is reduced even though you are paying your interest on time, the answer probably lies in your working capital management. So stay with me till the end because this episodes may completely change the way you handle your day-to-day finance. Let's get started. Most people define working capital as current asset minus current liability. Correct, but too simplistic. For an MSME, working capital is a fuel that keeps your operation moving. You buy raw material, you process it, you sell finished goods, you wait for customers to pay. Meanwhile, you still have to pay your suppliers, wages, and overheads. That cycle is your working capital cycle. Let's take an example. I will give an example of a small manufacturing unit. They have purchased raw material today. Now, production will take next 30 days. Finished goods will be held in stock for another 15 days. And now the customer take another 45 days to pay you. What is your working capital cycle? Let's calculate it. It's 30 plus 15, that finished good stock held date, and plus 45. It's total 90 days. That means for 3 months your money is locked in the cycle. Unless you have enough cash reserves, you need the bank to fund this gap, right? Now here's the manga's perspective. Men don't just land against what you ask, they land against how well your cycle is managed. Yes, if your cycle is too stretched, they worry about your repayment capacity. Now, do you know your own working capital cycle in days? It is inventory days plus receivable days minus payable days. If not, this is your first homework after this episode. Calculate you and let me know in the comments. Okay, when you get a working capital limit, your banker doesn't just hand it over once and forget, right? They monitor it every single month. How? Have you forgotten? They ask for your stock statement and receivable list. Yes, every month or maybe quarterly, right? You have to submit. Stock statement includes your value of raw material, your work in progress, your finished goods, and your debtor list includes with age analysis, how many within 30 days, 60 days, and 90 days, and your creditor list. This is how your drawing power is calculated. Okay, I'll explain you this with formula. Banker will check eligible stock plus eligible receivables minus margin, and this is your DP. Let's take an example. Your stock is 100 lakh, your debtor within 90 days is 80 lakhs. Total is 180, right? And suppose your creditor is 0 here. Okay. Now let's take the margin. Maximum bank gives the margin 25%. Now let's calculate 180 lakh on 25% margin. It's 45 lakh. Now what will be your eligible DP? Just add your stock plus receivable minus margin. It's 135 lakh, right? If your sanction limit is 150 lakh but you can only draw 135 lakh for next 1 month. Yes, here's the catch. If you delay your stock statement or show inflated receivables or have too many old debtors, your DP reduces. And suddenly your withdrawals are restricted. This is why many MSME say बैंक तो हर बार ही लिमिट कम कर देता है, when in reality it's their statement that restricts the DP. Yes. And now let's talk about where entrepreneurs usually go wrong. First, in my 11 years of career, I have really seen any MSME giving their stock statement on time. You always delays your stock statement. If you don't submit it on time, DP can't be calculated and the bank restricts your operations. You show inflated receivables. I have seen many promoters, they include 6 to 12 months old receivable as current. Bank exclude them. When caught, DP falls sharply. Yes, check returns. Even if cash flow is strong, repeated check bounces show your weak financial display, and banks view this as a high risk. Excessive credit to customers. You give credit on 120 day, 180 day just to boost your sales. This kills your cash flow. You mix your personal and business accounts. I have said this in my every episode. Why do you mix your personal and business account? This instantly destroys your banker's confidence. Yes, your personal expenses from OD account is a very big red flag for a banker. Let me tell you a story. I once reviewed a MSME with a working capital, I think 2 crore. Their statement showed 2 crore stock and receivables. But when we excluded their old receivables above 180 days, their DP came down to just 125 crore. Yes, promoter was shocked. But this is how bankers always calculate. And that's why his limit felt restricted. It's not that the bank reduced your limit, it's that your eligible DP didn't support it. Let me share you a secret. Bankers look at working capital management as a mirror of your business discipline. You need to regularly submit your stock statement. This shows your discipline management. Healthy receivables is equal to strong customer control. Balanced creditor means your trust with suppliers, and stable cycle is equal to predictable repayment. Yes. If these are all in line, your banker sleeps peacefully at night. Yes. If not, they start tightening terms, asking for more collateral, reducing your DP, and sometimes this leads to increase in rate of interest. Now think about it. When was the last time you had a genuine discussion with your banker about your working capital cycle? Now here's your checklist to keep both your business and banker comfortable. Submit your stock statement and data list on time. This is a non-negotiable. If it says monthly, submit it monthly. If your sanction letter says submit quarterly, then just before 7th of the month, next month, just submit it. Keep your receivables realistic. Don't hide old bad debts. Monitor your cycle. Calculate your inventory days, receivable days, payable days monthly. And please avoid check returns. Even one or two a month affect your conduct report. Keep your accounts transparent. Never mix personal and business accounts. Review your DP with your CA, your finance team every month. Now, this discipline can literally mean the difference between the loan enhancement and your loan reduction. So, let's recap today's episode, right? Working capital is the heartbeat of MSME finance. You know that now, right? It's not just about stock and receivables on paper, it's about discipline, credibility, banker confidence. As a borrower, manage your cycle, keep statements clean, and build trust. And as a banker, just support your client with clarity, discuss with them. But I also say keep an eye open to the red flags. Now, this was my episode 12 of Smart Credit Bytes. If you found this useful, share it with a fellow entrepreneur or credit officer. Awareness about working capital is not optional, it's survival. And don't forget to go back to our earlier episodes inside the sanction letter, loan covenants, and the personal guarantees. Together, these form a toolkit to truly understand MSME lending. Make sure you hit follow and subscribe button because in my next episode you will discover another insider secret. Until then, stay wise, Stay credit smart. Thank you.